Welcome to Machine Minds, where technology and humanity meet. I'm your host, Greg Terrusian, founder of Samson Rose, a recruiting and search business focused on the robotics and AI industries. The Machine Minds show is where we dive deep into the intricate world of robotics and artificial intelligence. As a staffing industry leader with a passion for the frontiers of technology, I'm pleased to be bringing you intimate conversations with the founders, investors, and trailblazers who are at the heart of the AI and robotics revolution. In each episode, we dig into their journeys, the applications of the products they're working on, and the breakthroughs that are shaping our future. Join us as we explore how these machine minds are transforming the way we live, work, and understand our world. Whether you're an entrepreneur, a tech enthusiast, or just curious about this amazing field, you'll learn something new with each episode. Let's delve into the extraordinary. Let's delve into Machine Minds. Hello and welcome to Machine Minds. I'm your host, Greg Terrusian, founder of Samson Rose, your robotics talent search partner. And on today's episode, we are joined by Sanjay Aggarwal, venture partner at F Prime Capital. Thanks for being here today, Sanjay.
Yeah, thanks for having me, Greg.
Let's jump into it. So I usually start with the introduction from our guests, and let's go back to the beginning, or near enough the beginning. Can you share a bit about your journey into the world of venture capital and specifically into the sector of robotics? I'm curious to hear how you got to this point.
Yeah, absolutely. So, my degree originally was in mechanical engineering and specifically in control systems. And so actually my first job out of school was actually at a robotics startup out in the Bay Area. And so I got, it was probably one of the funnest jobs I've ever had. We got to build all sorts of cool automation systems, mostly for high-end manufacturing equipment, such as for the semiconductor industry. So really, had a firsthand experience of kind of what traditionally was, made up automation solutions. And then over time, kind of transitioned out of that role, went to business school, did some other, kind of investing and consulting roles, and then started a company, was an entrepreneur for a number of years. And then when we exited that business, I joined the team at F Prime about a little over 8 years ago, just reconnecting with some folks that I had worked with previously. And originally, spent time in, enterprise software, which is a lot of what F Prime does. And slowly as kind of the, call it the AI revolution hit robotics, started looking at that space, partly because it was sort of a new, exciting opportunity for venture. But, more importantly, I had my own personal experience and kind of love of the space from my earlier career. And so the last several years, I've been leading our efforts looking at the robotics and automation space.
Amazing. So it came from like your own personal interest and kind of aligned with their investment thesis or evolving investment thesis. So you've been able to lead that internally.
Yeah, exactly. I mean, as a venture investor, you're always looking for kind of the next big thing, so to speak. And so it was a good opportunity to bring, my own personal interest in the space with an emerging area and try to develop our own internal thesis for the space. And, that's developed into a number of investments and a bunch of other work that we've done in the space.
Perfect. Okay. So you've had that obviously in-house engineering experience. You've done the entrepreneurial journey as well. How have those experiences shaped your perspective now on technology and investment? Because it must being on both sides of the table must be a really unique perspective.
Yeah, you definitely, come to the table, I guess, with certain, hopefully experience or maybe biases, depending on how you put it. But, certainly being an entrepreneur, it helps you really empathize with the founders that you talk to. It's a tough job, a much tougher job than one may realize if you haven't done it yourself. And so I think that, having been there, done that, sort of experience really allows me to connect with entrepreneurs in a meaningful way. And from the engineering side of things, having again worked at these companies, I saw a little bit of what worked and what didn't. Frankly, it was
Right.
in those days it was a really fun job and great company, but ultimately they had trouble scaling for a variety of reasons. And so I think that those experiences have colored a lot of my own view of what are opportunities and where to really focus our efforts today from an investment perspective. So again, I hope for me, I hope it is some source of differentiation as I talk to entrepreneurs with as they talk to an investor who's actually been in their shoes, and not only that, but also built similar systems as to what they're trying to build, certainly on the robotics side of things.
Yeah, 100%. I'm sure, speaking their language, understanding the position they're in at that stage as well, from an empathy standpoint, and then also an advice and guidance standpoint, it probably adds a lot of value.
Yeah.
So looking at your role at F Prime, what does your day-to-day look like as a venture partner?
Yeah, I would say, at the highest level, there's probably, three things that we spend time on, almost equally divided. The first thing is obviously working with our portfolio companies, helping them think through their strategies, helping them, grow, helping them fundraise, all the sorts of stuff that, that venture investors do to support the growth of their companies. About a third is meeting new companies. I think not only for finding investment opportunities, but also just learning. The markets evolve quite rapidly, and frankly, the entrepreneurs are the ones that are truly at the leading edge of what's going on. And so it's really, a privilege to be able to meet all sorts of entrepreneurs with all sorts of exciting ideas, and hopefully helps shape our own thinking, but also helps us identify opportunities that we'd be excited to invest in and support. And the third is more, what I'd call sort of ecosystem development and, content development, things like that that are kind of, just supporting of our own, views on the market. So, for example, whether that's events, either attending events or even hosting events, we've been pretty active there, to try to, bring together the community to, network and learn from each other. We've done a lot of content development, whether it's, blogs or the last couple of years, we published a report that we call the State of Robotics, which was our attempt to say, this is an emerging field. The data that exists around robotics is not great, because to some extent, robotics itself is a sort of can be interpreted in many ways, and so we took it on ourselves to say, hey, let's try to put something out there to help the broader entrepreneurial ecosystem as well as investor ecosystem understand kind of what are the driving dynamics around the industry to hopefully generate more excitement and hopefully also inform decision making as people think about their own strategies for the space.
Amazing. Yeah, I'm glad you mentioned the report, because if anyone hasn't checked it out, please do. I believe you can download it from your website, or there's a link on there. I've shared it with a few founders and everyone's found it very valuable. So thanks for doing that. And yeah, I believe we first met at an event. So I know that you're pretty active with your speaking, whether it's on panels or hosting as well. So it's great to see you out there. Yeah.
Yeah, and the fun thing about robotics as a sector is it's pretty new for the venture community. Robotics itself is not new; it's been around for decades. But kind of the current incarnation, enabled by AI advancements, et cetera, is pretty new for venture investors to be involved in. So it's really a nice opportunity to try to get out there and sort of hopefully be a voice shaping the future, but also learning from others around the space. And as I said, I think one of the most valuable things investors can do is actually to bring together the community to help people learn from each other as to what's happening. And again, for an emerging space like this, there's a lot to be learned, frankly. So that's a very important aspect of what we've tried to do.
And you're obviously very involved in that ecosystem and the community, whether it's building with your own portcos or finding out, like you said, and learning from others. How do you think, or how do you see collaboration between startups and more established companies evolving? I mean, there's some examples right now we were talking about offline with like larger companies where they're investing or testing out products and things like that. And there's the other like venture incubator arm that some companies do, or their skunk works. But
yeah,
do you see that evolving more or being as important in the future?
Well, it's undoubtedly very important, for the future of, robotics as an investment area. At the end of the day, most startups, if they're successful, they get acquired, by, by a large customer or by other, potential partners in the space. And so having that close collaboration is obviously quite critical. I would say that it feels very, it varies a lot depending on what you're looking at. So if you look at logistics as a category, for example, there's a lot of collaboration between end customers and robotics companies, and you see that through not only the adoption of those technologies, but in some cases these firms are investing in them as well. But at the same time, if you look at the system integrator ecosystem, which is very large, across the robotics ecosystem, I feel like they're still a little tentative about working with startups. I think more often than not, what we've seen is those folks, their first view is we will build it ourselves. Like we don't need to work with you.
Right.
And we'll see if that is ultimately successful. But I think they view the startup ecosystem as more competitive than, competitors than collaborators to a large extent. And again, like as you go into other sectors, whether it's agriculture or mining or construction, I think the level of engagement can vary quite a lot, actually. And I think there's a huge opportunity still, as many of these kind of incumbent providers start to think about, their own, future growth and future opportunities, right? I mean, it's, obviously the traditionally people think that they can build it themselves, but these areas are, are pretty technically sophisticated and perhaps require
Right.
partnerships or, collaborations or maybe even acquisitions of these companies. But again, I would say it's still early days overall, if you look at the broader ecosystem.
Very true. Okay. And you've obviously, in F Prime as a whole, you've made significant investments in a number of different areas. We're focused right now on robotics. So is there anything in particular that you look for from potential investments, whether it's the team, the product, the verticals that you might be, or sectors you're most excited about?
Yeah, I mean, so kind of all of the above. But, I would say that a lot of the kind of selection criteria, if you will, when people look at investment opportunities, depends a lot on the stage, that you're investing in. So we are primarily Series A stage investors. And so, the teams are obviously quite critical. I'm happy to talk about kind of the kinds of things that we like there. But a lot of what but the team alone is probably not enough to get us to an investment decision at that stage. Perhaps if you're more of a seed investor, then that's kind of sufficient. But for us, we want to see very strong teams, but also the early validation of the product, and that means not just pilots, but actually customers that are using the systems in production. Ideally, one or more customers that have gone, from the initial deployment to, expansion into multiple deployments, within a customer, to really understand that there really is product market fit, that there is value that's being delivered, by the solution, and that customers are willing to pay and go deep, there because at the end of the day, building robotic solutions that actually deliver value is pretty hard. And so, being able to, kind of figure that out and de-risk at least the initial, points of customer adoption are kind of critical criteria or criteria that we look for when we make our investments.
Nice. Any success stories that come to mind that show that or display that approach?
A couple of the recent investments that we made. One is a company called Burrow. It's based out of Philadelphia. They make a kind of a material movement autonomous vehicle for the agriculture space. So they work in outdoor specialty crops, and more recently have been focusing a lot on nurseries, which are both indoor and outdoor environments. When we invested, like they already had 100 systems out in the field. They had a couple of customers that had deployed 20 or 30 units. So there was clearly customer demand and love for what they were building. Of course, there's still a lot of work that they had to do in terms of improving the product, making it more reliable. They actually expanded into adjacent use cases over time. But that initial kind of seed of evidence was there in terms of them demonstrating that customers wanted it and were willing to go deep in it, even with it, even though they still had a long way to go. And now they're at hundreds of units out in the field. Wow. And just raised a Series B toward the end of last year. And then another recent investment that we made is a company called Taleo, which focuses on the kind of construction mining space, basically to automate very large scale equipment. So think of a bulldozer or an excavator, which are large, massive pieces of equipment. But their approach was actually a hybrid autonomy and remote operation approach. They call it supervised autonomy, and their view was that fully automating excavator is actually pretty hard, and
Yeah.
the barrier, it's a very high bar of performance, and so they said, let us initially offer a remote operation, capability, which gets the operator out of the cab into a safer, more, kind of desirable environment. Like these are very rough, environments that you're operating in, like very physically demanding, and so deliver value immediately with that, and then incrementally automate some aspects that are that are easier, that are lower risk in a sense, and potentially over time have single operators actually operate multiple vehicles through that mechanism. And there again, when we invested, they already had several customers that had signed big, that had deployed multiple machines, and and actually signed commitments to deploy a lot more. And over time, they've continued to grow and have over a dozen customers and a huge backlog of deployments,
Wow.
waiting to be rolled out. So those are the kind of things that are sort of a little bit more pragmatic, I guess, in terms of their approach. So they're trying to figure out what works as opposed to necessarily the perfect solution. And in so doing, trying to reach commercial milestones earlier on in the business than if you have to build a fully end-to-end autonomous solution like that. Can the bar of performance can often be so high that it takes a long time to get to market.
That's great. I love those examples. Yeah. And you mentioned Burrow just raised their Series B, and you guys tend to focus on Series A. Do you ever do follow-on investments?
Oh yeah, almost in all cases we'll do. We reserve capital to continue to support the companies, and especially for high-performing companies like that, we're obviously quite excited to continuing to invest behind the business.
Great, good to know. So the industry is obviously picking up a lot of steam. There's I believe anyway, the AI hype has brought a lot more eyes towards that, incorporated with hardware and robotics as a whole. So these are fast moving, they're dynamic. Are there any trends that you see that should be or could be most impactful over the next few years?
Yeah, I would say, one on the kind of the investor side, and one on the investor side, and one on the more company side. So from the investor perspective, as you said, there's a lot of excitement around the space. And so, I think, we've seen a lot more, much broader range of investors that, many of whom had traditionally not invested in these categories really start to get excited, which is good. And you see that reflected a little bit in the seed and Series A's rounds being, although everything was down in 2023, those were the stages that were least affected, partly because there's a lot of investor excitement. And this is important because at the end of the day, you need investors to, most of these businesses, are going to take some time to get to profitability and to an exit. And so, having a robust ecosystem of investors that are excited, knowledgeable, keen to support the companies, just creates for a better ecosystem and more healthy ecosystem overall. And so I think that has been quite positive, from my perspective. And as you said, maybe driven by some of the excitement around AI, but equally, I think people are starting to see that the traditional industries that most of these robotics companies are addressing, are badly in need of, or have traditionally been underserved from a technology perspective. And so there's a lot of, low-hanging fruit potentially in building solutions for those industries. The second thing I've seen is that, the original excitement, for most venture investors in robotics is really around logistics. That has been kind of the central pillar of a lot of investing, and part of that I always chalk it up to when Kiva was acquired for a few $100 million by Amazon. It kind of opened investors' eyes to say, oh, okay, wow, there's actually something there, and like that, there's the logistics space has traditionally been early adopters of automation. They already had lots of automation, so it wasn't as much of a leap for them to think about deploying new automation. So you see a lot of a lot of the excitement and in dollars, the last few years have gone in logistics, and there are other similar-ish areas, such as medical robotics. We've not been as involved as a firm, but, companies like Intrinsic Surgical is a massive, multi-billion-dollar, business. And so, again, big proof points that have led to more investment dollars. And defense, I would say, is a third one where you're starting to see, a lot more activity. But there are a lot of other industries that I think in the last couple of years, you're starting to see a lot more interest. And again, part of it is because they're sort of earlier stage. There's not as much, maturity around it. There's not as much competition. So if you look at agriculture, as an example, you're starting to see some interesting companies, come out in that area. Construction and mining, as I said, have been, pretty fruitful areas for new company creation. And so, there's been a number of companies looking at food, different kind of food technology, whether at the restaurant or more industrial food production, things like that. So these are all kind of emerging industries, if you will, and logistics and defense, medical, they're there and they will continue to be there. But, from an early stage investment perspective, we're actually a little bit more excited about some of these more emerging areas where, there's just less competition and still earlier phases of adoption, for automation.
So some of those are, very under the radar, or people wouldn't be aware of those. Question for you on that and these earlier adoption kind of industries. How have you seen them adopting new technology, especially if they've been underserved and sometimes they're more old school in their perspective, maybe, or how they work? Has that been a struggle to have, or do they really see the need and welcome the technology?
Yeah. I think the demand is high, and we've seen that in a couple of the investments that I mentioned earlier. At the same time, I think the bar for performance is high, and so if the automation solution isn't working some of the time, and you have to throw a person in to fix it, like, it kind of defeats the purpose of automation. And so figuring out kind of the right use cases, I think, has been a little bit of a journey in terms of just, really zeroing in on, okay, what can we actually automate that's useful, delivers ROI and is not going to, break down, or if it does stop, there's, it can seamlessly be restarted, in a sense. And so, if I look at agriculture, for example, some of the initial efforts in the agriculture space were all harvesting robots, right? People trying to do strawberry picking or apple picking or what have you. And, I think some of those are starting to see success, but it was quite a long time, right? Because the bar for performance on harvesting strawberries is pretty high. And so, I think it took quite a long time. And then the next phase that came in agriculture have been more autonomous vehicles. So Burrow is one, and there's kind of a handful of other companies out there that are kind of automating different farm equipment. Bear Flag Robotics was one that was acquired by John Deere. There's a company in Israel called Blue White, and mostly focused on automation of the machinery as opposed to automating the harvesting process. And I was just talking to an entrepreneur, the other day who believes that actually with some of the new stuff around Gen AI and LLMs and so forth, that, you can actually potentially now might be the right time to look at harvesting again, because technology has evolved to a stage where it's actually might be possible to do it in a good enough way. So again, like, I think the interest is there, the excitement is there, but finding use cases that, are actually going to deliver ROI, because these people are not going to, these customers are not going to invest in automation if it's not delivering value. I think that's what's taken time. And you see that maturing in a much more interesting way today than even a few years ago.
That's great. Yeah. Good stuff. So we touched a little bit on the team earlier when you were looking at investments, but obviously, world of startups, especially within technology, the strength of the team is obviously critical to the success.
Yeah.
From your experience, what qualities make up a successful team, and then also founders or founding team?
Yeah. I think what we always like to see is, number one, from a technology perspective, I think what you're seeing a lot more, I would say, is that the silver lining, if you will, of kind of the autonomous driving boom and subsequent bust, if depending on one's perspective, is that there are a lot of engineers that have built really sophisticated technologies, but also understood how to get them into production. Like, what are the demands to actually build a production grade system? And so, a lot of the best teams that we see are not just PhDs out of name your top university, but also have direct real world startup experience building solutions, trying to build production ready solutions and understanding what that means, actually not just a demo, not just a pilot, but actually production grade. So from a technology perspective, having that experience, I think, is more and more available, but also more and more important, as people really need to focus on getting to commercialization as quickly as possible. And then on the business side, you're seeing a lot of folks that have actually lived in these industries. So the founder of Burrow, he grew up on a farm, right? So he has a innate understanding of what are the demands, what are the needs, how do these customers think about buying solutions, how to talk to them, how to sell to them, all of those kind of things. Because building a great solution is only one piece of the puzzle, right? Selling it is equally, if not perhaps more important, nowadays. Understanding, again, how do you get them adopted, how do you integrate them into the workflows, all of that kind of stuff really requires a pretty deep understanding of the business. And so whether that's people that have been in those industries for a long time, or perhaps people that have just spent a bunch of time learning about it, I think that real depth of understanding of the use case that you're serving is really a critical piece of the puzzle from a team perspective.
Nice. Okay, thanks for that. And how important would you say that a culture of innovation is within these companies? And how do you think they can best foster that at that early stage when you're looking at investing?
I would say it's actually an interesting question, because it's obviously these are inherently innovative ideas and companies. But one of the interesting challenges I've seen for many robotic startups, including the ones that we've invested in, is the what I call the shiny object problem, which is that you build a cool technology and you show it to customers, and the customers are like, oh, what about this thing? Can you do that? Or what about this, this other, adjacent thing? Because they're so excited, and it's actually a good problem because it shows the customer is really excited about what you've built. But the flip side of that is it's easy to get distracted. So I think it's a constant balancing act for these teams, which is, to stay focused on what they're building and get it to be really bulletproof, production ready, work seamlessly, all that kind of thing, but also always thinking about what's next, right? Because technology is changing quite rapidly. So how do you incorporate the latest advances in AI into your product? But also, how do you think about perhaps expanding your product footprint into adjacent areas without doing something that's completely in an orthogonal direction that perhaps will just distract the team over time. And so there's no easy answer, but it is I think it's uniquely challenging issue for robotics companies, again, just because people see these solutions and their eyes light up with, oh, okay, what about this this thing and this thing and this thing, some of which may be great areas to focus on, and some of which may not be.
So just be a distraction.
Yeah.
I think it's also tough when you've got a certain amount of capital and you've got a certain amount of runway, and then any distraction like that, just adding time or burn, can be very detrimental.
Yeah.
But then you don't want to stifle people's creativity and innovative spirit. So it's a very interesting problem.
Yeah.
So looking ahead, where do you see the biggest opportunities for growth in robotics?
Well, there's been a lot of early stage activity, overall investment activity. So there are a lot of companies, starting to come up, starting to grow, starting to see, commercial traction, raising next rounds, et cetera. I think, opportunity number one in some ways is for those companies to be just hyper focused on commercial milestones. One of the biggest, one of the hardest rounds to raise that we've seen is actually the Series B round. And that's because you've moved beyond the, hey, we're excited about the team, we're excited about the product, we see some early traction, and now you're talking about, okay, well, let's show me how you're scaling. And so I think there's a big opportunity for all robotics companies to really be just hyper focused on, once you get beyond, once you've proven it works, once you've built the, initial solutions, how do you start to scale that? And some of the go-to-market parts of robotics is one of the hardest things, actually, because there's not a lot of experienced, go-to-market executives out there that have built and scaled robotics companies.
Yeah.
So I think there's, kind of an improving ecosystem of mentors and entrepreneurs that have been there, done that, that are hopefully kind of helping educate the next round. But I think there's a lot of companies out there that are starting to see some really interesting traction. And I think that just creates a virtuous cycle as they start to scale. Dollars kind of flow in, the potential acquirers see success that will, and hopefully you'll see more acquisitions going forward. It just creates a virtuous cycle, for the industry. So I think those, just the natural growth cycle is starting to kick in now, as these companies start to mature. And then second, obviously AI is driving all sorts of new capabilities, in terms of, what you can do. How do you, just simplify, the way you train your robot, the way you, just the capabilities that can be brought to bear. I think that's really exciting. And maybe the third thing I'd say is that there's a lot more technology that's being built to help robotics founders build their solutions, right? So, whether that's, better sensors, whether there's better perception algorithms, whether there's better, monitoring systems. I think a lot of that also starts to reduce the cost, to build. So you don't have to do everything, ground up. You can actually, get some of the building blocks from other vendors in the space. And so I think, again, that, that will hopefully help accelerate the growth of the industry.
Yeah, give more options for build or buy.
Yeah, exactly.
Sure. On the point that you made, how it's very difficult now to raise a Series B, because I've seen it as well. Obviously, there's no right or wrong answer here or right or wrong direction, but when you are looking at companies maturing and maybe an exit or anything like that, do you think it's best, controversial question maybe, but to be acquired or to try and stay self-sufficient and generate revenue, or the days of the SPAC are definitely dead for now anyway, for trying to go the IPO route? What do you see happening in the next 5 to 10 years with some of these newer companies?
Yeah. Well, I think most companies don't set out to try to be acquired, but I think the reality is that, the exits, for most companies will be an acquisition. Right. It's an extremely small number of companies that ultimately, are able to get to an IPO, either because they get attractive acquisition offers along the way, or, maybe there's something inherent about, what they're building that, that limits their ability to scale beyond a point. And so, I think that is the inevitable end for most companies. And so I think, and again, like I don't think a few people are out, set out saying, okay, yeah, we're going to get acquired. But I think, if the business is successful, those opportunities will hopefully arise. But I do think that one of the big success factors in robotics in particular, which is, much more true here than in, let's say enterprise software, as a more traditional area of venture capital, is the presence and involvement of corporates as partners, as investors, as go-to-market partners, whatever it is. And we actually welcome, those people to be involved earlier on in the business than you might see in other, kind of traditional sectors of venture, because those people can add a lot of credibility to your business. They can help accelerate the go-to-market. They have massive networks of customers and dealers. If they can, that they can help accelerate your growth, and if good things go well, then they become potential acquirers as well.
Right.
But again, I don't think the goal per se, but I think it's the reality, and kind of knowing the ecosystem, not just of startups, but also of, kind of the large, OEMs and kind of go-to-market partners is extremely valuable, if nothing else, than just to accelerate the growth of your own business.
Yeah, for sure. And also they're great test beds. Some of these places have like the right environment and right industry for you to test your product, get proof of concept, and then, like you said, potentially acquired or even become that figurehead customer. What sort of stage do you think companies should be at before they even entertain something like that?
I think, again, once you're past like the POC stage and pilot stage, I think these are all become very relevant discussions.
Right.
I mean, you're seeing actually even at earlier stages, like John Deere has a, what they call an accelerator program, which, for very early stage companies, and actually both Burrow and Taleo went through that program.
Interesting.
And I think the purpose there is, less for them to partner per se, but more for them to learn about you and for you to kind of meet their executives, understand, their problems, how do they think about, scaling businesses, et cetera. So I think it helps, build a network of the relevant executives, but also hopefully accelerate the learning process of building
Yeah.
businesses in those categories. But in terms of more formal partnerships, even the corporates, by and large, like if you're too small, like they don't, they're not going to spend too much time, on you, right? They have too many other things going on. But as you start to get some critical mass of customers, revenue, as they see you in their customers, sites, they start to get more interested. Which, again, as you're into the scaling mode, it's never too early per se, but I would say like you have to have some critical mass of deployments in most cases before these sort of folks even will notice you at all.
Yeah, true. Okay. And any challenges that you think the industry needs to overcome to achieve the potential that we're all hoping for
um,
or banking on?
Yeah, I mean, well, from an investment ecosystem perspective, and this is one of our takeaways from the State of Robotics report is that investors are investing not to build cool products, but to make money. Ultimately. Yeah, hopefully it's cool products as well, but cool products that don't make money, is kind of not the
Not the goal
of the investment community. So it's still there have been some exits, but there's still a long way to go. There's not been that many exits in this category, and there are a lot of unicorns and the like, and hopefully that will drive exits. But I think one big hurdle is to actually achieve those exits. Whether those are IPOs, whether they're acquisitions. Figuring out how to get how to return money. How to return a material amount of money that investors look at and say, "Wow, that's great. That was a great investment. I wish I had done that." And then that creates again this virtuous cycle. And the second, again, is just I think in today's market, the name of the game is all about capital efficiency. A few years ago, you could raise money with a cool pilot, a cool demo project, even at a Series B. Today that's nearly impossible unless you're, kind of a very well-known founder.
Right.
If you're the CEO figure, yeah, okay, maybe he's obviously a very talented guy and he was able to raise hundreds of millions of dollars. But that is, you see that
exception, not the rule.
Yeah, you see that very rarely nowadays. And so, when I talk to founders, I always tell them that, even if you have to compromise on, some of the cool technology that you're building, like getting to market as quickly as possible, getting commercial proof points, getting customer adoption, being able to show that those data points, not just anecdotes, but actual data points around, customers getting value, customers using their product, every day in and day out. I think that's really the real focus that companies need to have. And, I think the market is kind of becoming more and more aware of it. But, again, I don't think it's, I think there's still work to do for that to fully sink in, for the ecosystem.
Thank you. Okay. And finally, for those aspiring to enter the robotics field, either as entrepreneurs or investors, well, actually, I guess let's separate those two, because we obviously have seen people, and you mentioned it earlier, getting burned by like self-driving cars and the investment there. And we talked about that. And you want, from an investor standpoint, to people to have success, right? Invest eyes wide open and have fruitful exits. Let's talk about investors first. Anyone that doesn't have experience in investing in robotics but is thinking about it, any advice for that group of people?
I always suggest they do what I did, which is I tried to go meet as many founders as I possibly could to really try to develop some sort of, view of, what create success, right? Because I think investing in robotics is, you gotta figure out the industries that you're interested in, the use cases, the teams, the technology. There's a lot of things to kind of navigate through this process, which and it's hard to predetermine what those things should be, to some extent. It's easy to say, hey, I'll invest in logistics, but I would also just argue that logistics is kind of getting mature, right? And so it's harder and harder to find net new companies unless you're investing in later stages of businesses, which there are probably some great opportunities there. So,
Right.
so I think to me, like, it's important to, have a, be serious, like, don't be a tourist investor, but actually go and, spend the time, meet founders. I think, founders appreciate, investors that have actually, thought about the industry and have, a thoughtful point of view, as opposed to, hey, we're just kind of experimenting, and we'll see what happens, kind of approach. So yeah, I think there are a lot of opportunities. There are lots of companies are out there looking for money. I think it's a great opportunity to actually develop your own perspective on the space, by kind of firsthand experience, talking to founders, going to trade shows, all this kind of stuff. I think you can learn a lot through that mechanism.
Awesome. And now switching gears to advice for aspiring entrepreneurs. Anything at that early stage, at founding stage, maybe people looking at capital, any advice for them?
Yeah, and I think we talked about earlier on the team side, right? I think part of it is, finding the right team that you're going to work with is probably step number one. And again, to me, the ideal model is, the combination of technical, not only knowledge, but experience, combined with a deep insight of the market that you're trying to serve and the use cases that you're trying to serve. And I think if you can find that, then that is definitely the right starting point. And the reality is that there's a decent amount of seed stage kind of money out there, looking for opportunities. And so if you can put together the right team, kind of formulate the right idea, I think there's and actually a decent amount of capital ready to support that. But again, like, the days a few years ago, you could just be a great PhD coming out of a top school, and that might have been good enough. I don't think that's with rare exception, I don't think that's good enough anymore. And so finding the right team, and then and doing your homework around what is the right we know this industry, but what is the right use case? What does the competitive market look like? What's our edge in the market? All the kind of the standard stuff that investors look for is equally relevant in this space as well.
Perfect. Great. Thank you. Yeah, I think it was you or Fady, I can't remember, one of the panels that we were at, that said, like, that right mix, or the most successful robotics companies that you've found have had like that industry expert or industry knowledge. Like, they're not technical per se, but they have that thorough understanding of, like I said, the buying cycle, the needs, the language, the use case, paired with the technical founder who can take all of that input and then create a product. And then together they tend to be the most successful, instead of someone like in a vacuum creating technology or just trying to sell something that they don't know.
Yeah, and again, like, I say it a little bit back in the context of the name of the game of startups these days is capital efficiency, right?
Yeah.
And yeah, if you're a smart person, you can probably figure it out. But if you lack the industry knowledge to begin with, then it's just going to take you more time, right? And more time means more money, and you just may not have enough. You may not have enough of either to get to the next.
For sure.
And so anything you can do to accelerate the learning process, with the right team, and doing the right background research is just going to be valuable. And again, in any market, but in particular in the current investing climate.
Definitely. Okay. Awesome. Well, look, this has been amazing. Thank you for all of your insights and sharing everything. Where can our listeners find out more about you, F Prime, follow you, get this report? What's the best platform?
Yeah, I'm mostly active on LinkedIn. You can, fprimecapital.com, and on LinkedIn you can find, some of the stuff I've written, blogs, and some of the reports that we've published as well. So, always excited to connect with other founders in the space. So feel free to reach out.
Amazing. And any events or anything coming up that people should keep a lookout for?
Um, yeah, I don't know, nothing that immediately comes to mind, but yeah, I'm sure we'll be doing more, kind of small dinners and the like. And there
Perfect.
was, some of the big trade shows kind of came and went already earlier this
Yeah,
year. But I'm sure there'll be more coming around in the fall. So
great.
we try to be involved as much as we can in those.
Awesome. Well, Sanjay, thank you so much. I appreciate it. And I look forward to following your journey and all the new investments that are hopefully coming up this year.
Yeah, well, thanks a lot, Greg. Thanks for the opportunity. Really, really fun to catch up.
Yeah, my pleasure.